we talked about this, that this was going to be a big print, right? I think we all expected this to be a big print.
Yeah.
I actually also kind of put myself on a limb there, and I said, I wouldn't be surprised if at some point we print a mid to high nines, maybe even a 10 handle at some point.
Yeah, we're getting there.
And the reason is because, rents are a little, they lag in how they're reported inside of CPI. So we have a couple more months to go of rents, and rents aren't moving or budging a bit. That's number one. We do see a little bit of fall off in energy prices, but I'm not so sure that it's enough, frankly, to move the needle. So I think that we could be in a sustained period for a while. The more interesting thing I thought today was that Canada surprised everybody and raised their benchmark interest rate by 100 basis points.
Okay.
So and they just came 1 full point, 100 bips, and they just said, "We're going for it. We need to tame this. We need to break the back of inflation."
They ripped the Band-Aid off. Yep.
Yeah, and and I think if you read the Fed minutes more carefully, I think Jerome Powell is basically ready to do the same thing.
Yep.
After this inflation print, the expectation for July went to 80 basis points from 75, which means a small percentage of people actually think it's going to be 100. And September, I think, moved to 75. So the question is that enough? I just don't know. I don't know.
Hello and welcome to Money Talks. In today's video, venture capitalist, SPAC sponsor, and CEO of Social Capital, Chamath Palihapitiya, updates about the emerging markets, along with the breakdown of the Sri Lankan economic crisis and the 9.1% CPI report for June 2022. He also shares his thoughts on the current market sentiments from retail and institutional investors and why he is worried about sustained inflationary environment. Make sure to stick around till the end of this video where Chamath Palihapitiya reveals his market outlook for July and August 2022.
Sri Lanka has, I think, a bunch of short-term issues and a couple of very long-term issues. Let me set the backdrop because I think this is really interesting. Let's study Sri Lanka through the lens of two other countries, Jamaica and Singapore. If you go all the way back to 1960, so roughly when Singapore became a nation, the Jamaican population in 1960 was 1.6 million people. The Singaporean population was 1.6 million people. Sri Lanka's population was 9.8 million. Jamaica's GDP was 700 million. Singapore's GDP was 700 million. Sri Lanka's was 1.4 billion. Now you fast forward to 2022, Jamaica's GDP is about 13 billion. Singapore's GDP has grown to about 360 billion. And Sri Lanka's GDP is 80 billion. So what did Singapore do right? What did Jamaica kind of get right? Because one of the things that they kept in check was their population, even though their GDP didn't expand that much. So per capita income was still quite healthy. And then what did Sri Lanka get right and what did Sri Lanka get wrong? Well, some of the things when you look at Singapore is that they found a way to embrace, despite a very heterogeneous culture and sets of religions inside of that entity, inside that city-state, they found a way to promote multiculturalism, yet also promote English as the lingua franca. Why was that small thing so important? Because it allowed them to be a hub for the rest of the world in a way that many, many other countries couldn't do. The second thing that they had was a very low level of corruption because they had a leader, in that case, Lee Kuan Yew. And again, some people in the West will paint it as slightly authoritarian. He would paint it as Asian values. But the net result of it was very low levels of corruption, a small but highly effective public service, and meaningful investments in education and healthcare to make that country grow over decades. And within a generation, that country completely, exceeded all expectations. Sri Lanka struggled through a civil war. I was a byproduct of that civil war. It was partly religious, it was partly ethnic, and it was 20 plus years in the making and in the happening. And it took a very right-wing autocratic leader, the brother of the current deposed president, to basically root it out. Now, in order to root it out, there were enormous amounts of war crimes and all kinds of things that I don't think anybody would support, except it brought some amount of stability. And so then you would have thought, okay, maybe this is the point at which you can now really start to grow. But these guys, yet again, found a way to navel gaze and just to infuse so much corruption and graft inside of how the government was run. By the way, and it wasn't just the right, it was also the left. They spent 2.5 times more on defense as of last year than they did when they were in wartime. Doesn't make much sense. The public service grew to the largest it ever did in a moment where, you really should have prioritized private enterprise. So all of these things sort of created a situation where they fundamentally didn't know what they were doing.
Sri Lanka is in the middle of a deep and unprecedented economic crisis that has led to a large protest and its president quitting and leaving the country. However, the head of the International Monetary Fund says that other countries could be at risk of having similar problems. Countries with a lot of debt and little room to make policy change will have to deal with more stress. Sri Lanka should be enough of a warning sign. Kristalina Georgieva, who is in charge of the IMF, said this on Saturday. She also said that developing countries had been losing money for 4 months in a row, which made it hard for them to catch up with economics with more money. Sri Lanka is having trouble getting enough money to pay for crucial import foods like fuel and medicine for its 22 million people. The cost of living has gone up by about 50%, and food prices are now about 80% higher than they were a year ago. This year, the value of Sri Lankan rupee has dropped against the US dollar and other major world currencies.
No, but yes and no, because the owner equivalent rents are up so much that they may actually, break even, right? Meaning rents go up by so much, oil goes down by so much, they cancel, and we're still at 9.
Okay, so that's your prediction for July, which we'll get in August. You think 9?
I'm worried that we're in a sustained inflationary environment. I'm worried about that. I hope that we're not. But then the question, Jason, secondarily is then what do the markets do? And what's so interesting today is the markets shook it all off. I mean, you could not have had a worse inflation print. Everything was up.
Well, 10.
meaning it was beyond the number that was expected. Every component of it was up. Everything looked horrible. And people were like, meh.
Many people think that ex-president Gotabaya Rajapaksa messed up the economy with bad policies that were made worse by the pandemic. Sri Lanka had built up a lot of debt over the years, and last month it became the first country in the Asia-Pacific region to stop paying its foreign debt in 20 years. Officials have been talking with the IMF about getting a bailout of $3 billion, but these talks are on hold right now because of the chaos in politics. But the same global headwinds, like rising inflation and interest rate hikes, falling currencies, high level of debt, and shrinking foreign currency reserves, have also hurt other economies in the region.
Just one small clarification is, we obsess over CPI right now because we're all kind of these fake macro wannabe traders. But I just want to remind you, because the Fed has been pretty clear about this, they don't focus on CPI. They focus on something else instead called PCE, which is the Personal Consumption Expenditure Price Index.
Yes.
And I don't know what the flow through from CPI to PCEPI is exactly, but that is the broadest measure of goods and services, which does include food and energy. So it stands to reason that PCE may stay elevated for a while, which may give the Fed enough of the motivation they need to go 100, to go another 100, or maybe go 170, and then a 75. I think that David's point is right. All this taming that we've been expecting to see, we haven't seen it. And so every month it's it's coming next month. Every month it's been, it's happening next month. At some point you may just have to say, maybe we're in a sustained period for a while, and I have to believe it's going up before I believe it's going to stay stable or go down.
So do you agree with Chamath's take on the current economic crisis? Tell us in the comments. Also, don't forget to like and subscribe. See you soon with the next video. Thanks so much for watching.